Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, we've had quite a bit of news this past week, and with a 3-day weekend up ahead, President's Day on Monday, let's not beat around the bush, and we'll get right into your top 3 points. At point number 3, it was the reestablishment of TikTok onto the app stores of both Google and Apple just yesterday on Thursday, after the Trump administration had sent a letter to both companies reassuring them an immediate ban would not be following. Now, some of you probably remember TikTok was banned from the app stores back in January over concerns over their Chinese ownership from the company ByteDance. Now, these concerns are still there. However, the Trump administration is taking some time to try to come to negotiations with the Chinese company about possibly divesting from the app. Now, if they cannot come to an agreement on that by, let's say, early April, then be prepared for the app to be banned yet again. So if you want to be posting some videos or get back on your favorite dopamine hit, make sure to get that app downloaded before it's too late. At point number 2 is the development on peace talks between Russia and Ukraine. Now, President Zelensky out of Ukraine has come out and said that he is open to direct communications with Russia, but also in engaging in the Trump administration's plans to resolve the war over in Ukraine and Russia right now. Part of that engagement, though, is dependent on the fact that President Zelensky has put forth a revised plan to the Trump administration, issuing that they would be willing to give up some of their precious minerals in their territory for reassurances from the United States and additional security from the United States as well. However, we should get more and more details on how these peace talks develop and further negotiations on this after this upcoming weekend, as President Zelensky meets with Vice President Vance at the Munich Security Conference. And then finally, at point number 1, you all probably might have guessed it. We alluded to it last week. It was the CPI numbers coming in a little bit hot this week for the month of January. Now, we did see increases on both core and headline CPI for the month of January, primarily being led by an increase in shelter costs. Now, as you remember, that is a huge component of the CPI measure, as well as other household goods. Now, what this really tells us, once again, is that rate cuts are probably going to get on pause for quite a bit extended out into the future, because as prices continue to rise, interest rates need to stay higher to prevent those from inflation reaccelerating again. On top of that, with all of the announcements of upcoming tariffs, that also lends to inflationary pressures. So the Fed is probably going to be curbing their rate cuts for the foreseeable future. Now, if we see further developments on that and we see some moderation, we'll keep you posted here and see if that rate outlook changes at all. Now, that does it for your top 3 points this week. What are we looking to for next week? Well, next week, we're going to be keeping an eye out on the Fed meeting minutes for this past month to see if we can get an inside look as to how Fed committee members are really viewing inflation and the economy, and see if that gives us any insight as to their upcoming rate decisions. Now, that pretty much does it for this week's video. But as always, if you have additional questions, please reach out to your financial advisor. And if you don't have one, please click the link below or dig into the written weekend review. Now, one thing I want to make sure I mention before we sign off, it is Valentine's Day, so please make sure to go get something for that special someone in your life if you have forgotten so. I know I need to still do it, but otherwise, please go and enjoy your weekend, and we'll see you the same time next week. Thanks again. Bye.